Hello and welcome everyone to Gold Asset of the Day for the 31st of August 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So in the last week, we have seen hedge funds and money managers, yet again, they have trimmed their overall net long position on gold by 5%. And with that, we're at the end of the month now, being the very last trading day of August. We're seeing that typical end of month profit taking, outflows. The dollar is breaking back out towards 20-year highs versus the euro, and we have gold dropping back down towards the 1700 level. Everything that we talked you through last week, our expectation was we were going to see a rollover in price action for the metals, presenting you with opportunities to buy at lower prices as we move into the month of September. So our expectations, they are all playing out. As we mentioned to you on the weekend, commodity reports, and previously, when we broke out to 1800 off the CPI data, going back to 3 weeks ago, we booked profits at 1,806 US dollars per ounce for gold over 2 trades, 2,000 points banked. In fact, last week as well, when copper prices, they broke out to 2-month highs, we took the opportunity with our clients at the Gold and Silver Club to book 440 points profit. And Brent crude oil last week as well, we banked 1,200 points. Everything that we're seeing at the moment is very typical for this time of year as you get towards the end of August and move into September. We mentioned it previously to you that typically the dollar is very strong moving into the month of September. We hit profit target on the dollar last week at the 109 level. And with that, we've continued to see further outflows of many commodities coming back down towards their swing lows. What does this mean for you? I would suggest it means a massive opportunity here. If you've been patient, like we have, waiting for silver to break back down towards the swing lows, waiting for gold to come back down towards the swing lows, waiting for platinum also to roll over, now you have tremendous opportunities to scale in and build out this position in the month of September at much lower prices. Certainly, you would have seen many traders get FOMO over August when gold, silver, platinum, copper, palladium were all breaking out to the upside. All we've done is scale out of profits, been banking into strength, particularly on oil as well, making sure to lock in profits when Brent got back above $100 per barrel. So we've seen oil break back down today. We've also seen many metals, they're moving back lower, end of month profit taking, the usual cycle, moving into the month of September. Now this week, we of course have non-farm payroll data, which you need to keep an eye out for on Friday. That will create more volatility, more opportunities. Then going into next week, you've got a public holiday in the USA on Monday. Then we're moving into the European Central Bank announcement next Thursday, which again could be a massive opportunity, particularly now that we've broken the parity level versus the dollar. The European Central Bank will look to use the tools available to them to prop up the euro, and essentially we could see a supersized rate hike, much like we were expecting at the Fed FOMC statement as well, off the back of Jerome Powell's comments last week from the Jackson Hole Symposium, which was very hawkish, suggesting higher rates for longer. So we're also likely going to see the European Central Bank come out with a very similar narrative. There is a very clear playbook to how to trade these central bank news items when we do see a rate hike. Essentially, in the lead up to that, normally you see risk off. Normally the dollar builds up momentum. Traders, they get cautious, they take their profits from commodities, much like we're seeing at the moment. This gives you an opportunity to sniper in at much lower prices, then capitalize on the slingshot moves that you get subsequently, especially as you get towards the end of September, then into the month of October. So everything we've been discussing with you is playing out. We told you before, no way we're going to be buying gold last week at the higher prices when it was at the 1740, 1750 level. We're waiting. We've now got gold breaking back down towards the 1700 level. It's currently trading around 1,711 US dollars per ounce. So we're being very patient, waiting for lower prices to sniper in and take advantage of the dips that we're seeing at the moment in the metals. So again, this comes down to utilizing statistics, data, market intelligence, learning and understanding the daily, the weekly, the monthly, the quarterly cycles for each commodity. Alongside that, the capital flows in the market, the key areas of liquidity, the intermarket correlations, the ratios, the key narratives that you need to be aware of, the geopolitics, the fundamentals, and then further align that with how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join a community of successful traders, learn the research-driven approach to the market, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.